Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Well, hi there, and welcome to the ISC FX Options Weekly Outlook for November 2nd, 2009. As always, this is Jason Ayres of OptionSource.net. Let's take a look at a weekly chart of our U.S. dollar index. This is a great way to gain perspective as to how the U.S. dollar has been trading against a basket of currencies. Well, that 75 focal zone that we identified last week as a possible level of support held. Our dollar index here snapped back into the 76, 77 focal zone. At this point, a rejection here does open the window for a possible continuation down into our 73, 74 focal zone. However, if the U.S. dollar index finds support within this 76, 77 range, we would look for a move up into the 78, 79 focal zone. A quick look at our daily snapshot shows the importance of these major support and resistance levels right now, with a little bit of consolidation taking place within our 76, 76 and a half focal zone, suggesting the possibility that if the dollar index holds here, we could see an extension up into that 77, 77 and a half level. All right, let's take a look at the first of our ISC FX options pair values, the CDD, the U.S. versus the Canadian dollar. Well, the U.S. dollar regained quite a bit of ground against the Canadian dollar last week, extending its upside move beyond that 106, 107 focal zone that we have been looking at for quite some time as a possible upside resistance. Now, at this point, the path of least resistance suggests that a move into 109, 110 is a distinct possibility. If the 106 level does not hold, we may see a retracement back down in to find support once again down at the 103, 104 focal zone. Well, the YUK, the U.S. versus the Japanese yen, closed the week on the downside, testing a measured retracement in at our 89-90 focal zone. At this point, there is a possibility for a bounce here that may, in fact, meet with some resistance within this 91, 91 and a half range here. A break beyond that lends further credibility to a continuation of the YUK to the upside, with the U.S. dollar gaining strength over the yen. The 92.5, 93 would be a logical near-term target should this 91, 91.5 level be broken. Next up, the U.S. versus the Euro, as seen here through the ISC FX options pair value EUI. Well, the U.S. dollar regained some ground against the Euro, trading up into our 67.5, 68 focal zone. And at this stage, a break above 68 opens the window for a push all the way up into the 69, 69.5 focal zone. We do have to be open to the possibility of a rejection here, which may see our pair value move back down to retest support at the 66, 66 and a half zone. Well, the U.S. dollar lost some ground against the pound, as we can see here in the ISC FX options pair value BPX. We're now moving down towards a test of 59.5, 60, which has been a key support level on our radar for quite some time. Support here is likely to retest this 61, 61.5 focal zone. However, until we see a break of this, we cannot rule out the possibility for continued weakness. If we do see a break above 61.5, the window is open for a push up into the 62, 62.5 focal zone. Let's take a look at the AUX, the U.S. versus the Australian dollar. Well, the U.S. dollar finished the week strong against the Australian dollar, breaking back through that 110 focal zone that has been on our radar for quite some time. With a push through this level, we're likely to see a move up into this 112, 113 focal zone here. A break back below 110 is likely to try to find some support within that 108.5 to 109 focal zone. Let's take a look at a few of our key points. First of all, the U.S. dollar bounced off of 75 to launch a robust rally. We saw a moderate retracement last Thursday. However, the selling was contained above an important support at 76. If the index holds at 76, we'll be looking for a continuation to the upside, targeting 77.5. The CDD, the U.S. versus the Canadian dollar, pushed beyond the 106-107 focal zone, which now becomes an important support level. Friday's strong close for the U.S. dollar suggests the upside momentum should carry the pair value into the 109-110 focal zone. The YUK was one of the weaker pair values with a pullback down into an important support level along the upper range of the 89-90 focal zone. If the YUK holds here, this could be the launching point for a more robust rally for the U.S. dollar against the yen. The EUI experienced a robust rally as the pair value held at the 66.5 focal zone. The pair value is currently testing an important resistance level, but appears to remain strong. A break above 68 will lend further credibility to a test of our upper focal zone. The BPX rejected at 61 and retraced back down towards the 59.5, 60 focal zone. The window is now open for a move back into the 61, 61.5 focal zone. However, we need to see a break above 61.5 for us to be confident in a bigger picture move to the upside for the U.S. dollar. And finally, the AUX broke through 110. As long as this level holds, a test of the 112, 113 focal zone is a high probability. And this has been your ISC FX Options Weekly Outlook for November 2nd, 2009. As always, I'm Jason Ayres of OptionsSource.net. Thanks for joining me here this week. We'll see you here next.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionsSource.net member. Visit www.optionsource.net. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.